How's it going, everyone? Hope you're all having an amazing day and taking care of yourselves. Welcome back to another 10-minute Thursday, and in today's video, I'm going to be analyzing the Palantir stock. The company builds software that helps organizations integrate their data, decisions, and their operations. They provide user experience to work with data without requiring them to learn like querying and statistical modeling. So basically, they're kind of trying to take over my job and make it redundant. So maybe I shouldn't even make this video, but it is what it is. So we keep it pushing. One issue this company is really solving that stood out to me was investigators are using their software to find drug trafficking rings and also find exploited children. Data is the new oil. Any company helping with big data analysis is bound to make money, and Palantir is at the heart of this. Why is the Palantir stock price down from highs of 39.2 last year to around like $11.8 this year? Well, off the top of my head, I can think of two reasons. One being that the market cap was too high. At this current valuation and at this current price today, Palantir still has a market cap of around 28 billion, which is quite a bit for a company that's still in its early stages. And also, since February 2021, all growth stocks have been hammered. If you look at the chart of almost any growth stock, you can see that they're down nearly 70 to 60% from their highs. Now let's look at their Q3 earnings for 2021. As you can see, Q3 2021 revenue is at $392 million, which is a 36% increase from Q3 2020. The company added 34 net new customers in Q3 of 2021. Since December 31st, 2020, commercial customer count has also been up by 135%. Commercial customers are basically businesses that use products and not consumers like us. During Q3 2021, they also closed 54 deals worth at least $1 million, 33 deals of which were at least $5 million, and 18 deals which were at least valued at $10 million. Q3 adjusted free cash flow is also $119 million, which is a $172 million improvement year on year and represents a margin of 30%. So free cash flow is basically the revenue that the company made, and then you subtract taxes and all operating costs from that revenue. Now let's look at Palantir's income statement and its balance sheet. Now, as of Q3 2021, Palantir has $2.3 billion in cash. Now, this may look like a lot, but they got a lot of this cash from issuing new shares, which is also why their market cap is pretty high right now. So the company does this by equity financing. Actually, in 2020, Palantir only had 905 million shares outstanding, but as of 2021, they have 1.91 billion shares outstanding. That means the company has been issuing a lot of shares, and this in turn has diluted shareholder value. This has caused the value of shares to depreciate and is also a reason for the significant drop in the share price. Although that said, it's good for a stock like Palantir to have a lot of cash so they can invest in R&D to improve their technologies. And you can also see that their total assets is much higher than their total liabilities, which is a good thing. The company also has $174 million in accounts receivable. That means that other companies owe them this much money for using their services. And this is almost half of Q3 2021's revenue. Now, if we look at the revenue for Q3 2021, you can see that it's at 392 million, which is an increase from 289 million in Q3 of 2020. Another really important thing to notice is how much their cost of revenue has fallen from Q3 2020, which was 149 million to 86.8 million in Q3 of 2021. This means it's costing Palantir less and less to manufacture and deliver these products to their clients. Now, if you look at their net loss, you'll see that it was $102 million, which is a significant decrease from Q3 of 2020 when it was $853 million. Another reason for this loss is because of the stock-based compensation this company provides. They have an extremely high stock-based compensation, as you can see, and it was $184 million in Q3 of 2021 alone. If they were to bring this down by like $80 million, the company would be profitable based on that alone. The company also has three main software programs, which I'll talk about briefly right here. So one of them is Gotham, from where Batman is from. That's a pretty sick name, if you ask me. But anyways, it's a software designed specifically for the government. The next one is Foundry, which is big data analysis for businesses. And the last one is Apollo, which helps critical systems stay up to date and operational 24/7. If you look at Palantir's institutional ownership, you'll see that it's at 31.66%, and more institutions have added to their position than have decreased their position. Some of the big institutional owners are BlackRock, Vanguard, and ARK. Now let's go over to the technical analysis of this stock. As you can see, the stock is clearly in a downtrend right now. It's making lower highs and lower lows. You can also see that it has support at around $11.8, and if it hits 11.8 and bounces off again, it could be a triple bottom, which is a bullish sign. You can also see resistance here at 14.4, which it has hit a couple times, but it's not the strongest resistance in the world, and with some volume, the stock should be able to go through that pretty easily. As you can see, the RSI is about to enter oversold territory, but from the chart, the RSI seems to be bouncing a lot off 2020 RSI, as you can see in multiple cases here. So maybe if you're looking at the RSI as an indicator, you should wait till it hits 20 to see a slight uptrend from there. In January of 2022, the company also announced a partnership with Hyundai to build a big data platform venture. So that's it for Palantir stock. Their earnings are on the February 15th for Q4 of 2021. So if you're thinking of investing, definitely keep an eye out for that date, as it might be a catalyst. But that's it for today's video, and I'll see you guys in the next video. Deuces.